The Bitcoin piece is, for the first time ever in the fall of an empire where they print money, overborrow, debase the populace, and abuse the populace, like all of us have an exit for the first time ever.
Exactly.
There's never been an exit, and an exit that's peaceful, invisible, and weightless. So I can put it into my brain, it doesn't weigh anything, and I'm not harming anyone. And so nobody needs to know. If chaos hits the street and we're in a Great Depression, if I know you have gold, I'm showing up to your house and I'm gonna beat the shit out of you and take the gold. I can't look at you and go in your home and know that you have 12 words. And so it's a peaceful, weightless, invisible exit. And so that's the one unique part that we're living through if this is the fall of an empire.
Mahler begins by outlining a scenario where weaker currencies are destined to fail against stronger ones. He likens this to a ranked list, with Bitcoin potentially at the top, followed by the US dollar, and weaker currencies like the Nigerian naira at the bottom. According to Mahler, this cascading failure of currencies will eventually leave Bitcoin as the last standing currency. However, he points out that this isn't a simple process. The institutionalization of financial risk means that if one major currency fails, it could trigger a domino effect, impacting the entire global financial system. Mahler highlights the interconnectedness of today's world, where financial markets are more synchronized than ever. He uses the example of the US opening a swap line with Japan due to the yen's weakness, explaining that such actions are necessary to prevent a broader collapse. The reason? The global economy is heavily invested in US treasuries post-World War II. If a major economy like Japan is in trouble, it could lead to a massive sell-off of US treasuries, potentially collapsing the bond market and dragging the US down with it. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Weaker currencies are going to fail against stronger currencies. So you can think of it as like a ranked list. If Bitcoin's at the top, maybe the dollar is somewhere below it, and then below all the way there is like the Naira. So these things are going to cascade on each other, and you'll hopefully be left with one, and that's Bitcoin. But the problem with that idea, or like the potential problem, is that the risk is institutionalized. What I mean by that is if someone fails, everyone fails. So the US just opened a swap line with Japan. Because Japan is showing serious weakness. And the reason the US can't afford that is because what does everyone have post-World War II? Everyone's wealth is stored in US treasuries. And so if they're in trouble, what do they have to do? Sell the treasuries. If they sell the treasuries and the bond market gets destroyed, then the US goes down too. And so when I say risk is institutionalized, we're all on the same boat. If there's a hole in the boat, it's not like someone goes down, we're all going down. It's the fucking Titanic.
But you guys go the last down. You're the last one.
We'll go the last down. But I think what we've seen is that, listen, in 2008, bank runs were a lot slower than Silicon Valley Bank. We live in a highly connected world now in the digital age, in the virtual realm. We're very connected. So if anyone understood that the Japanese yen was done, they would the bond market would react immediately. So yes, later, but I don't know how much later, 10 minutes later, 10 days later, 10 months later, but like not 10 years later. So they've institutionalized risk. It's one giant, which is why the only way out is to print money. Even if you let all the banks fail and you reset through a Great Depression, well, okay, then no one's money is in the bank. Where's everyone going to go? Bitcoin. So, there's a painful way to exit and there's a sneaky way to exit. Printing money is the sneakier way to exit. But yeah, that's the problem. The problem is that they've institutionalized the risk too much to where theoretically the dollar is like the victor, but practically if everything else fails, so does the dollar because they're going to sell all the treasuries on their way down. The Bitcoin piece is, for the first time ever in the fall of an empire where they print money, overborrow, debase the populace, and abuse the populace, like all of us have an exit for the first time ever.
Exactly.
There's never been an exit, and an exit that's peaceful, invisible, and weightless. So I can put it into my brain, it doesn't weigh anything, and I'm not harming anyone. And so nobody needs to know. if chaos hits the street and we're in a Great Depression, if I know you have gold, I'm showing up to your house and I'm going to beat the shit out of you and take the gold. I can't look at you and go in your home and know that you have 12 words. And so it's a peaceful, weightless, invisible exit. And so that's the one unique part that we're living through if this is the fall of an empire. So I think people draw a false, analogous to gold. The problem with gold is gold centralizes. It's very hard to custody. It's very hard to verify. The reason the U.S. was able to leave the gold standard is because the U.S. held all the gold.
Yeah.
Now, if something like a precious metal centralizes, it's very easy to manipulate that. Bitcoin doesn't centralize. It does the opposite. The fact that Satoshi put it out on an email list of cypherpunks and then say, you guys got it from here, all the Bitcoin's already distributed. We're already at 19 million out of 21 million. So many of it's lost. It's already gone. Even if Michael Saylor and BlackRock, Saylor's been borrowing ungodly amounts of money to buy this thing. And
you think it's a good idea, actually?
Yes.
Okay.
But he's barely eclipsed 1%. How much would you have to own to have a concentrated supply? Central banks own a ton of gold. So the point is, for Bitcoin, it's already distributed. It's already gone. So there's the all-time low as far as how many Bitcoin are held on custodians, exchanges, financial services, implying that the individuals are holding this thing. So it is physically impossible to manipulate if you don't have it. You can sell as much Bitcoin as you want. That's just a market participant selling. If they drive the price down to 10,000, there's going to be a lot of buyers, and then the price is probably going to go back up to where price discovery needs to meet. So I think it's just it's not gold in that it can't concentrate. People can store it in their brain. They can verify it on their phone. And so it doesn't need to be held. I don't need Chase to hold my Bitcoin. I hold it myself. So I don't know if that makes sense, but it just isn't. There's nothing they can physically do to attack the system. I think that there's enough civil unrest now to where you're going to be able to extrapolate sides as to someone is supporting your ability to protect and store your time and energy, and someone is advocating for their ability to take from your time and energy. So I call that orange versus green. I do think that this is the first, and I wouldn't be shocked if in November I saw a map of America and some states are orange and some states are green, and I wouldn't be shocked. And it'd be curious for me to see which states are in favor of a politician debasing our time and energy and which are in favor of politicians supporting our ability to protect it. But this election to me is the first orange versus green, for sure.
Yeah.
Mallers addresses the growing institutional interest in Bitcoin, noting that while Wall Street's involvement might raise suspicions, it doesn't pose a threat to the system. He acknowledges that while institutions can sell Bitcoin and influence its price in the short term, they can't alter its fundamental decentralized nature. Mallers also touches on the idea that higher Bitcoin prices might deter institutions like the Federal Reserve from buying large amounts, as significant allocations would dramatically drive up the price. However, he also suggests that the US government, which holds seized Bitcoin, might be strategically holding onto it as a hedge against future uncertainties. This indicates a level of awareness and strategic thinking about Bitcoin's potential role in the global financial system.
I don't think the Fed's buying Bitcoin because the price is at 65,000.
They need higher prices, I guess.
They would drive higher prices. If the Fed's going to be buying Bitcoin, they're not going to be turning on an hourly DCA. So any meaningful position would move this market substantially. That's probably Bitcoin. That's probably its biggest problem. Is you can't allocate $5 trillion to this asset yet without wildly or drastically shooting the price to the upside. So it's still young. It still lives within a small skeleton. So no, I don't think the Fed's buying. But no, the U.S. government does hold Bitcoin. They do. Seized ones.
Yes.
But so do I think that there's probably a strategic reason as to why they haven't sold those? Yeah, I think that they were like, well, just in case, it's probably worth keeping these. So I do think that they're aware and thinking strategically about it. I'd have to think that because I live there and I hope so, but I don't think the Fed's buying yet. It's Bitcoin's the only free market in the world. Bitcoin's the only like there's no artificial interference between us humans when using Bitcoin. And so for that reason, I do think Bitcoin is love, Bitcoin is truth, Bitcoin is peace. All of these like philosophical, abstracted, meanings and feelings that we strive for, I think Bitcoin enables that better than other systems. I mean, there's nothing in the way between you and I when we connect through Bitcoin. There's nothing, there's no institution, there's no government, there's no product, there's no card network. It's just pure humans. And I think that's probably why. Bitcoin is defended by the populace. The thing that defends Bitcoin is the honest actors within the system. So I can appreciate the fact that you are suspicious, but I disagree with the validity of your suspicions. I don't think Wall Street can manipulate the price. I don't think them selling Bitcoin is a threat. And I don't think it's a bad thing that they want access to Bitcoin. My dad, he's been running a short dollar trade, is what he calls it. I mean, the idea is that like governments have to print, right? I love the global debt to GDP metric. That's the amount that they've borrowed from our future with no way of making whole on it. So, and that loss has to be realized. Money's our time and energy in an abstracted form. So they have to print. And my dad thinks about it like, well, if they have to print and that's debasing the dollar, how can I monetize this reality that I was born into? And he owns Bitcoin, he owns real estate, and he owns exchange stock is a unique one, Chicago exchange stock. The idea is that printing money turns everyone into a speculator. When everyone is a speculator, where do they speculate?
It's a hedge.
And so exchange stocks look like this. And so I would probably own more land and maybe like, I don't know, exchange stock, maybe a little bit of gold. But I think land is good. But I mean, there's no second best. Bitcoin's unbelievable.
Mallers concludes by emphasizing that Bitcoin represents the purest form of a free market. Unlike traditional financial systems, there is no artificial interference, no institutions or governments acting as intermediaries. This direct connection between individuals in the Bitcoin network is what Mallers believes makes Bitcoin love, truth, and peace. It's a system defended by its honest participants, not by any centralized authority. Mallers rejects the idea that Wall Street can manipulate Bitcoin, arguing that the decentralized nature of the network and the spread of its holdings among individuals prevent any single entity from exerting control. He contrasts this with the traditional financial system, where governments can print money and devalue currencies, forcing everyone into a speculative mindset. Please like and subscribe my channel.